What's up everybody, welcome to the Stocks channel. My name is Corey and today we had a very strong finish to the week after the unemployment data, and the weekly charts are starting to look a lot more bullish. First up, let's take a look at the SP500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so let's look at the weekly chart of SPY first, and we can see that we did hold that weekly support at SPY 380, which was that very critical support I told you the bears needed to break. And I reminded you not to get overly bearish at support. Wait for that support level to break down. If you took my suggestion and did not short the market because we never broke down support, you should have avoided losing any money by shorting this rally. Going back to the initial rejection from this resistance trend line, I said there was a good chance we would sell off for 3 consecutive weeks and then see a bounce on the 4th week. And while we did not get the bounce on the 4th week, we did see a very small-bodied weekly candle which told us the selling pressure was drying up. And then you can see here on the 5th week, we finally got that strong bounce. So this is clearly a very bullish weekly looking chart because it does look like we are holding support. And on a weekly close, we did close near the high of the week and back over the 20 weekly simple moving average. So there is a very good chance the bulls are going to try to make a stand here, but we are still in the bear market while we're below this weekly resistance trend line. So the next very critical resistance levels for the bulls to break above is going to be that level right around SPY 400. Remember, we're looking at the weekly chart and these are weekly critical levels with the critical weekly support at 380 and the very critical weekly resistance up here right around 400. So for that reason, you can stay bullish on SPY while we're above critical support, but you need to get a lot more risk off as we approach critical resistance. And then if we break through that resistance, you can get a lot more bullish. So just a quick recap, you can stay bullish on SPY above 380 and then take risk off the table as we approach 400. And then you can get a lot more bearish on SPY if we break down below 380 or start approaching that very critical resistance level. Alright, jumping over to the daily chart of SPY, we can see that we got the bullish close on the week with today's price action, and we did go up on increasing volume, which is obviously very bullish. Anytime you see high volume buying, there's 2 possibilities, and one of it is going to be a short squeeze because we did start breaking out of the trading range, which was the break above SPY 386. We closed the gap just above 387 and we got up towards our critical resistance level at 390, and we did break back over the 20 daily moving average and 50 EMA. So this was very bullish price action. Now remember, just yesterday I was talking about how this was a very obvious daily bear flag, and sometimes when something is too obvious and everybody can see it, the market will do the opposite. Now that doesn't mean there's no way we can go lower from here, because obviously we can still get rejected from resistance. So you still need to watch that very critical resistance on SPY right here at 390. If we get the break above 390, I think we'll easily get to 393. And then if we can break above 393, our next target will be that gap fill just above 396. So going into next week, you're instantly getting a lot more bullish if we can break through 390. But if we do start seeing a rejection from 390, that does mean we could come back down to retest the breakout of the trading range, which could mean we come all the way back down towards this support trend line right around 380 to 381. There's no coincidence that 380 is also the critical weekly support. So without a doubt, 380 is going to be very critical support for you bulls, which means you can stay bullish as long as we're above that risk level, or you can use this daily support level right around 378. Below 378, we're likely getting the bear breakdown, and this could still be a bear flag, which means we could be heading for our next legs lower at 371 or 364. So it's a relatively simple market to trade right now. You just have to be disciplined and make sure you're not getting overly bearish as we approach support levels, because there's clearly still bulls out there, especially after we just saw a high volume buying day. On the NASDAQ 100 triple Qs, we were up 2.76% today, and the triple Qs also were at that critical support level intraday at 260, and then we started to see the high volume buying and we closed back over the 5 EMA and 13 EMA. The bulls are not out of the woods yet because the next critical resistance is just above right around 272 to 273. If the bulls can break through all of that resistance, our next higher targets will be 280 and then the gap fill at 283. and you can stay bullish in the triple Qs as long as we're above 260 or this breakout level right around 267. If we break down below 260, the bears will be out in full force and we'll see the next leg low at 254 and then 250. In the Dow Jones, we were up 2.14% today, and the Dow Jones is also looking relatively bullish, going up on increasing volume, and we have that gap to fill just above 337. Remember, the Dow Jones is now in a double bottom breakout above 334, which means we have a valid price target at 341. So I am looking for the Dow Jones to blast through that gap and go higher than that. At 341, we'll reach the price target and find strong resistance, and then if we break above that, it is possible the Dow Jones could start pushing up towards 350. So in the Dow Jones, you want to stay bullish as long as we're above this risk level right around 333 to 334. And if we break that, then you're looking for support right around 329 to 327. This is still possible that we are getting a lower high before the next lower low. So you do want to manage your risk at these levels I'm giving you. On the Russell 2000 IWM ETF, we were up 2.25% today. And while we did go up on increasing volume from yesterday, we still have relatively average volume overall. The Russell 2000 broke out of the trading range, which was the break above 176, and instantly got to our next leg higher at 178. If we can break 178, we'll be looking for the gap fill right around 179 and that strong resistance trend line right around 180. Critical support is now 176, and if we break below 176, we will need to find support down here right around 173. On the ARKK ETF, we were up 1.13% today, and ARKK is hanging in there and really going absolutely nowhere, just hanging around this zone around 31. Clearly, this is looking like a bear flag, so the longer the bulls can't break above 32.5, the more confident the bears are going to become. However, it is likely ARKK is going to at least attempt to get a breakout, so I do expect to see a push towards 32.4. But if we find resistance and get rejected from there, we could be getting ready to retest the lows around $30. If we break 30, the next leg low will be 28.37, and we can get more bullish above 32.5 for that gap fill at 34.4. On the VIX, we were down 5.84% today, and the VIX is getting absolutely obliterated with that very strong crush every time the VIX tries to break out above 23, and the VIX is right back down towards this support between 20 and 21. This is where the VIX has been bouncing all of the bear market, so don't be surprised if we see volatility coming right back into the market, but we will be getting a lot more bullish if the VIX can start crushing down below 20. On Bitcoin, we're currently up 0.84%, and Bitcoin is still holding above the rising 20 daily moving average and just below the 50 EMA, so I expect to see strong resistance around 17,100 and 17,550. If we break that resistance, we should make a run for 19,000, and you can stay bullish as long as we're holding above support around 16,500. If we break that support, the critical support at 16,000 is likely to be tested, and if we break that, the next leg lower in this bear market will be 14,395. On Amazon stock, we were up 3.56% today, and Amazon is bouncing off of this support between 80 and 83, and we're right back up to critical resistance at 86. If Amazon can break above the 20 daily moving average between 86 and 87, I do think that's a bull breakout that could bring it all the way back up towards 91 to 95. So you can get a lot more bullish in Amazon if it breaks 87, but if it gets rejected from 87, we could be coming back down to $83 and then 81. And if we break that support, the next leg lower will be $80 and then 77. On Microsoft stock, we're up 1.18% today, and Microsoft was just getting way too oversold below the lower Bollinger Band, and we did bounce from that support zone right around 220. That's more than likely just a dead cat bounce, and you can see we did close below resistance at 225. So if we get rejected, we will still be looking for Microsoft to make that next leg lower down here at 214. Below 214, we're going to invite capitulation into Microsoft stock, and we can't rule it out completely. However, if we start breaking back over 225, we can get more bullish for that gap close right around 237, and above 237, we still have critical resistance right around 242. On Nvidia stock, we're up 4.16% today, and Nvidia continues to bounce off of this support zone between 141 and 142, and we did get the bull breakout above 147. We still have resistance between 150 all the way up to 156, but if we can break above 156, we'll be looking a lot more bullish, which means we could make another run for 166 to 174. If we lose support down here right around 140, we could go for that next leg lower at 133. On Tesla stock, we were up 2.47% today after a very deep gap down open, but again, we continue to see high volume buying around this critical weekly support at 107. So I do think Tesla is trying to put a bottom in around this support zone. 107 is extremely critical support, and the bulls did everything in their power to make sure we closed above it today, and today was the weekly candle close. So I continue to expect to see Tesla turning this corner using 107 as the base of support, which means we should easily fill the gap at 120. Above 120, we have strong resistance at 123, because if we break above 123, I think we'll see a very quick trip up to the critical resistance at 138. 138 should be a lot of selling pressure, which means it's likely going to be very strong resistance. So if you're looking for an exit on this stock and you are buying down, start considering taking your profits right around 123 to about 138. If we do lose support at 107, there is a lot of high volume buying at this level, which means it should be a very quick trip down for that next leg lower at 94. Even though I don't expect it, we can never completely rule it out. So I do think Tesla is about to have some very favorable bounces in the next couple of weeks, which could easily take it up to 138 and possibly even as high as 155 to 167. On Apple stock, we were up 3.68% today, and Apple continues to hold this support zone between 125 and 126, and it's back up to critical resistance at 130. Remember, Apple 130 was the critical support level that was lost. So if we continue to get rejected at 130, this is going to look like a double top rejection, which should easily take us down to our weekly price target at 122. Below 122, we could see high volume selling and capitulation. So while it is possible, we never know for sure. So you will want to wait for that support level to break down before you assume that Apple is going to flush to the downside. This is a very good company, so don't ever get overly bearish on it, especially near these very strong support levels. Above resistance at 130, we'll be looking for a run back up towards 135. On the financials, we were up 2.22% today, and the financials are looking very strong with the price action above all of the moving averages and slowly but surely developing a strong bull trend. The industrials were up 2.74% today with that very nice bounce off of support at 99, and we did finally close that gap right around 100. From here, look for the next resistance right around 102.4. The healthcare sector was up 0.92% today, and it continues to bounce off critical support at 134, but still below a negatively sloping 20 simple moving average and resistance zone between 136 and 137. The energy sector was up 1.9% today, gapping up and running right into that resistance at 88.5, and so far we are seeing sellers at that level with a gap to fill to the downside at 86.3. So jumping back over to the SP 500, without a doubt today was high volume buying, which means we could see SPY trying to break 390 and making a run for 393 to 396. Let the price action do all of the talking, and I never suggest getting bearish at support. So if you're looking to get bearish on this market, you need to wait for critical support levels to be lost, which is down there right around 380. Remember, the weekly charts are looking a lot more bullish, so don't ignore the fact that the weekly charts are starting to look like we could be turning a corner. In general, I think this is going to be a very noisy year between the bears and the bulls battling for control of this market, so it's very important you understand that you are following price action and staying objective. If the price action continues to break through critical resistance and you continue to short this market, you could be caught holding a bag if the market does indeed get that bullish breakout, which is going to be up there right around SPY500. So we'll take it day by day with an open mind and we'll stay objective. And I do think it's going to be a very exciting trading year. Also, don't forget I have Bank Trade Alert, which is an algorithm-driven trade alert service that only trades at ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank Trade Alerts or learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, come join us over at the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.